Hello and welcome to Tax Snax, the new series of short talks from Square tax chambers. I'm Ross Birkbeck and I'm going to look at some of the anti-avoidance issues raised in Rishi Sunak's 2021 budget. The headline, of course, is the announcement of 1,000 new tax investigators to clamp down on exploitation of the COVID support schemes. This has been dubbed the Taxpayer Protection Task Force. I'm sure we'll call it TPT pretty soon. And this is a response to a potentially enormous fraud that statisticians principally believe may be involved with the COVID support schemes. The National Audit Office estimates that about 3.9 billion may have been misclaimed on the furlough support schemes. And then there's potential £26 billion loss the government's facing over the lifetime with the bounce back loan scheme. Again, up to 5% of which is estimated to be misclaimed or fraudulent. So there's clearly a real business case for this new department. I note, of course, that HMRC have already begun the process of reviewing some 27,000 high-risk claims and opened approximately 10,000 inquiries already into suspected fraudulent activity. In some instances, they've begun criminal investigations already as well. So, with or without the TPT, we're going to see this coming down the line pretty soon. I've got, I think, 4 questions I want to raise about it. The first really is, well, this is a one-off thing, we hope. What's going to happen to these 1,000 investigators when they've dealt with all the COVID stuff? Hopefully, this won't go on so long. Are all these people going to get fired? Or are they going to be sort of melt across generally into the general avoidance investigations teams? Is the TPT as a task force going to remain a separate body? I suspect it's going to be a mixture of those last two, that these people aren't going to go away. And what we're generally seeing here is a beefing up of what is a profitable enterprise for the government, which is chasing taxpayers. So this is probably here to stay. The second question is really how much crossover will there be between COVID and regular tax? I mean, the new task force will not be able to avoid looking at matters other than COVID claims. It's just the nature of revenue inquiries that suspicions about one issue, say COVID claims, leads to disclosure, and that raises more suspicions about something else. So managing inquiries carefully will be key to stopping them spilling over into other issues, but also what's increasingly a problem, from my end at least, is stopping them going on forever, because things will run and run, and that's just very stressful and time-consuming and costly to our clients. The third question is this all just about fraud, which is what HMRC seem to indicate, or will they also be going after just mistaken claims, careless claims? And that difference is potentially really significant, not just in terms of the volume, because I imagine it will significantly increase the scope of the kind of claims this task force is going after, but also there could be a real issue about the burden of proof there. Fraud, of course, the burden is likely to rest with the revenue to show fraudulent activity. If we're just talking to mistakes, are we going to see the burden of proof shifted to the taxpayer? Because if we are, evidence is going to be a real problem. I suspect a lot of these furlough claims, it's going to be very hard for companies to prove that their workers were not working, proving negative is always hard, were not working during the relevant periods. The last point, and perhaps this doesn't matter, perhaps it's academic, is this tax at all? I mean, HMRC are dealing with the COVID support schemes because who else could do it? Which other department could do it, of course? And similarly, it's going to be, I suspect, accountants and us tax advisors who are going to be dealing with the investigations, because again, who else is available there for our clients? But I think this is not regular tax law. It's going to be a real question as to how what is the procedural law and stuff behind these claims, and how are they going to be managed, and are we going to? We always have to upskill, but we're going to have to look at that carefully. So, an interesting development. I certainly think it's going to keep us busy. There were a bunch of other moving on. There's a bunch of other avoidance-related provisions announced or confirmed in the budget, and not least, of course, the change to the IR35 rules. I'm not going to deal with that today. You may have been lucky enough to catch Robert's talk, if that is your area of interest, last week, 2 weeks ago. But I thought I should mention a few other points about general avoidance measures being proposed or coming in. The first is the financial information notices. So this is a new information gathering procedure that Revenue is giving itself. Currently, of course, information notices can only be issued against third parties, i.e. people not the taxpayer, with the consent of the taxpayer concerned or with the consent of the tribunal. Now, the revenue consider that this has been unnecessarily holding them up, particularly with regards to, they say, international requests from other tax authorities, where there's an aspiration to provide information within 6 months under the international agreements. Currently, it's more like a year right here. So there's some concerns about that. And they're going to address it by introducing a financial information notice. Now, this is an information notice that they can issue against any financial institution. First question, what does that cover? Without the permission, and that's the important, without the permission of the taxpayer or the tribunal. So that will speed up the process and prevent slowbacks. The recipient of the notice will still be able to appeal, I should say, but one's got to ask, why would they? If you're a bank and you're sent a notice to provide information, why would you bother appealing that unless there's a very particular concern? So it's potentially a very significant move. The revenue will still need the tribunal's permission to stop the third party, the bank, say, telling the taxpayer about the notice. So they can only be kept secret with the tribunal's permission. But generally, they can just issue these things as they want. And given that they have a recent history of using their powers as much as they can, and when the revenue is given a power, they just run with it. We shall have to see if this stays a niche tool designed to deal with international requests, or, which I suspect, simply results in HMRC going after your bank first, which will be quite a big change. And significantly affect the balance of power, I suspect, in inquiries. The second thing I wanted to mention is follower notices. This is a small change, but essentially a positive one. Positive because everyone hates follower notices. The regime is terrible, and they hate it so much the revenue have agreed to reduce the penalties, kind of. To recap, the way follower notices work is that if the revenue consider that your tax appeal, the issue in your appeal, if you're appealing an assessment, has already been decided in relation to another taxpayer, they can make you fix it and pay the tax without going to the tribunal by issuing a follow notice. Now, I've already onto the fundamental issues I have with that, but I'm going to skip over those. Now, if you don't do what the notice says, i.e. pay the tax, you get fined, in addition to having to pay the tax, 50% of the tax they say is due. And the follow notice itself is not appealable, only the penalty is appealable, and on limited grounds. And this makes follow notices very difficult to deal with, as you basically have to either give in and pay up, or wait until you're actually fined, and then claim that not complying was a reasonable thing to do. And that's why what we're seeing, in fact, is no one makes that appeal of the penalty. They just take the thing to judicial review and try and get it stopped earlier. So the suggestion, anyway, the change is to reduce the penalty from 50% down to 30%, but keeping that additional 20% in their back pocket, as it were, and you'll be charged that if, when you go to take your appeal to the tribunal, you either get struck out, or the tribunal says, presumably in its judgment after the hearing, that your case had no merit. And so any of those things will bring in an additional 20% penalty. It's not much. All those consulted about this have said more should be done to take the edge off the follow notice regime, like better rights of appeal, scrapping it altogether, that sort of thing. I mean, the House of Lords and the Court of Appeal have both criticised follow notices as a draconian system. But the revenue say doing anything more than this penalty reduction would undermine the whole point of follow notices. And I suppose, given that the whole point is really just that they don't like having to defend their assessments in court, that's probably right. So small victories. Lastly, I want to touch on some stuff about DOTAS and promoters of tax avoidance. There's a few changes the government's bringing forwards, a couple of tweaks to those regimes. In regard to DOTAS, the proposed changes will basically enable HMRC to issue a notice to suspected promoters, so not people actually doing things, but the revenue suspect are doing things, asking for an explanation of what's going on. And if they're not satisfied, they will be able to issue a DOTAS number to those promoters and to publish details. So essentially, it allows the revenue to bypass the promoter or taxpayer's obligation to disclose under DOTAS and just to do it themselves. That's what it looks like. And the big question with this is how it will interact with the idea of planning being notifiable under DOTAS, as notifiable is the key gateway to the regime, and with it the APN regime and the penalties that can flow from DOTAS notified schemes. So, will HMRC simply be able to suspect that you should be notifying, and then give you a number, and then that means you're within the regime proper, or is this going to be kept separate? So we'll have to see how that plays out. Lastly, there's also a number of changes, as I said, to the HMRC's powers to proactively deal with people and promoters that they think are enabling tax avoidance. These are technical. I don't have time to go into them all today. But what that's going to mean is even more careful consideration of the avoidance provisions whenever tax planning actually produces positive tax results. I often think that's the situation we're in. If what might be considered regular, this is tax efficient, you now have to think, well, does it have a main purpose of tax advantage? But that's where we are these days. Anyway, that's all I've got time for today. Thanks for listening to Tax Snax.